This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Brokers.
Welcome back, everyone. Jeff Farnham joins us now with the JTS Mortgage Minute. Jeff, good to see you.
Yeah, good to see you, Bill. Good morning.
Last week we talked about the fact that a lot of people think they can qualify or can't qualify for a mortgage because their credit score is not good. A lot of consumers already have mortgages. What could they need to do to make sure their mortgage is in the right position for them?
Well, one of the things we encourage people to do is that, every couple of years, let us do we offer a free mortgage review where we can come in and review your situation, where you're at, and just see if there's any other advantages for you or opportunities for you.
What kind of things does JTS and Company do free?
Well, in that mortgage review, one of the things we'll do is we'll look at what rate you're at, the type of term you're on, whether you have mortgage insurance or not, that PMI that you pay if you didn't put at least 20% down on a conventional loan. A lot of times we can eliminate those things.
You mentioned mortgage insurance. Now, can consumers eliminate having to pay mortgage insurance?
Well, in a lot of cases, if you've had a mortgage for a while, let's say you did an FHA or even a rural housing loan or even a conventional loan with mortgage insurance, and coming back in, letting us review that, a lot of cases you can get rid of that PMI altogether. If you had an FHA loan that you did in the past couple of years, you may be paying $100 or even $200 worth of private mortgage insurance or MI, as we call it, and we can eliminate that, saving you a couple $100 on the MI and maybe even saving some additional dollars on the rate. So in a lot of cases it can be very, 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 very advantageous to get that review done.
Another good reason for anyone to come by your office, because saving money is always a good thing.
Absolutely. Yeah, go ahead.
Before we wrap things up, can you tell us a little bit about what the rates are doing now?
Yeah, we're seeing, ever since the election, we've kind of seen a little bit of a steady rise on rates. There's some pressure on the bond market still with OPEC, the non-OPEC producers saying they're going to cut production, and we're seeing some more oil prices rising, and that's having a little bit of an impact there. So rates are going up, so if you've been thinking about refinancing or buying, now may be better than later as we continue to see rates rise. It's a quarter-point difference on a $150,000 loan is about a $20 to $25 difference in your payment to you. So as rates rise, your purchasing power is going to go down, or the amount of money you could save on the refinance is going to go away. And same thing applies on the reverse mortgage. Now may be better than later if you've been thinking about looking into that for yourself or your parents.
Good time to give yourself a house for Christmas.
Well, it is. And that's what we tell people is, if you get started, getting your rate locked in now, not closing until January, you got the holidays. A lot of people want to not get caught up in trying to do this in the holidays, but go ahead and get your rate and stuff locked in now and closing in January can be to your best benefit.
All right, good information as usual. And of course, if you missed last week's show, you can always go to their Facebook page. And if you want more information, you can call them at 329-9090 or visit their website, www.jts-co.com. Jeff, good information. Good to see you.
Good to see you, Bill. Thank you.
Merry Christmas.
And to you, sir.
All right, we'll take a break. Come back with more in just a minute.